sort of eat the profitability.
So how sustainable is the profitability in the next 2 years?
The winner, the institution that will emerge as the winner will be the one who will have the capability to further grow the asset base in enormous scale. In other words, we will have to accept scenario wherein the fee, I guess the average fees will thin further going forward. So it's the size and scale. So you just have to generate a large asset base to be able to generate fees.
Some of your success in the last 2 years has been as a result of disintermediating the bank's traditional deposit base. And I'm sure that that trend will continue maybe for a year or so. How do you see that evolving to a point where you have critical mass and you grow on the back of your own, momentum in that sense?
Well, in developed countries, that's really the trend that we naturally observe. As financial markets grow and become more sophisticated, there's a shift from deposits to investments. In the last 2 years, 2 or 3 years, we've seen a lot of corporations, large corporations, going into the capital market for their capital raising activities. And that's what has provided opportunity for growth in the asset management industry. We see that still continuing.
Describe to us the linkages between the asset management business and the commercial bank on the one hand, and maybe the corporate finance team that you have. Are there synergies there that you're benefiting from?
Yes, very much. First, the distribution network. So the growth in especially in the retail and wealth management space is really driven by how strong your distribution network is. And since 3 years ago, we came up with a strategy to tap that space, and that the synergy that we have with our branch network really put a lot of impetus in terms of growth. On the origination side, we also work very closely with our investment banking group, and it's in the bank we look at it as a total financing perspective, and that's where the assets under management can be pooled to be able to bring that strength as an institution for BPI to go to an issuer, a corporate issuer, and that large intermediation capacity, both balance sheet and off balance sheet, will provide that strength in terms of our ability to provide that financing to these corporations.
When you go to seek a mandate from a pension fund or some of the institutions that you work with, what is your key differentiator against some of your other competitors? What do you sell on the back of?
Well, I talk about 3 things normally: our people, technology, and our strong brand equity. We are about 160 trust and investment professionals in the asset management and trust group. We have a very well-defined organizational structure with a strong investment team. Observe a very robust risk and investment management process. We have a very strong technology platform, we call the IT platform, from both portfolio management system, investment accounting system, to what we call the wealth management system, which is a financial planning tool capability. And then the strong brand equity. This is unique business in the sense that it's almost synonymous to trust. It's people entrusting funds to you. So it's the brand equity of BPI.
Do you talk about performance?
Yes, we do. Yes, we do. In fact, what we focus on really is that performance is not supposed to be viewed as in a single dimension. We look at it on a risk-adjusted basis. We present our performance in terms of our strong historical risk-adjusted returns.
How have the performance of some of your assets been over time? What sort of numbers do you parade?
The target for our investment team is to be able to outperform benchmarks. For the retail investment funds, there's predefined benchmarks according to asset classes, and we have performed quite well
And some
over the
numbers would
years.
be
Well, the bond, if you look at the last 2 years, especially in 2008, when all the asset class returns were in the red, we are the only asset management institution that reported positive returns across all fixed income categories, whether it's peso denominated or foreign currency denominated.
the culture of your fund managers. Is it capital protection, or is it, or do you have teams that also focus on risky assets?
Well, it's different mandates would have different risk return
Or the skill
objectives.
set internally?
In terms of skill set, we define it by asset class. So there's a fixed income team, there's an equity team, and there's a portfolio management team running the diversified portfolios for institutional like pension funds and so on. And the culture in terms is more towards achieving the highest risk-adjusted returns over a well-defined horizon. It's not about performing well this year and the following
So
year, leave it to chance.
More of middle of the road skill sets in terms of safeguarding assets rather than
It's about consistency. It's about consistency in returns. We don't want to be on the highest end in terms of outperformance, only to see in a market downturn well below benchmark or even negative returns. So it's the consistency in returns that we have employed as a discipline among our investment team
You've
members.
said somewhere that you'd like to build the business further on the back of the wealth management industry in the Philippines and on the back of the remittance business that continues to grow in the Philippines. What's wealth management in the Philippines? What is this, the concept of the high net worth individual? How large is that pool? How sophisticated? Or is it somewhat different in the Philippines compared to other countries when we say wealth management?
Yeah, there's really no defined, there's really no rigid definition in terms of the wealth management industry in the Philippines, maybe because it's still more synonymous to the banking business, wherein
So what are we talking about in terms of wallet share or wallet size?
well, normally a wealthy customer would maintain about probably three banks, and if we deal with the most affluent, they would probably pick a strong local bank and two other foreign banks. And the way we position ourselves is, if it's the domestic bank, we'd like them to pick BPI.
And what do you offer them as a value proposition? Is it something where they have to walk over to a BPI branch to start a relationship, or do they maintain their banking relationships and have a separate asset management relationship with BPI Asset Management?
Well, the key is deepening the relationship with whether it's corporate or individual. So the moment we have a strong corporate relationship or deep enough relationship as far as the individual client is concerned, it's how it becomes more sticky. So it's a total relationship that we want to nurture with a customer.
It goes right back to mining your own data pool first, your own customers who bank with BPI in the 700 odd branches you have across the country.
Exactly. In fact, the strategy that we have crafted for the next 3 years will focus on being able to cross-sell those products to a customer base.
How many of your 700 odd branches would you say are asset management ready?
Well, we have what we call the retail or the unit trust funds that are distributed in our branches, and probably 500-600 would be very active in the distribution of those unit trust funds. And there's what we call a process of certifying these people. We call it the UITF specialist. They have to be able to go through this training before
of
being
your branches have
500 or 600. And if you look at the number of
specialists.
people, there's about 3,000 people already trained to
Are you the
sell those
largest
products.
deployer of trained investment professionals in the branch network?
Well, I would think so because well, we have the largest branch network. At the same time, we have the largest pool of investment professionals. So
Right.